Well, let's get back to the markets now and what's happening in the business world. Fewer Americans are applying for unemployment benefits in the last week, but the drop a small one from the previous week. Applications at 400,000. That's a seasonally adjusted number. It's still way too many for a healthy economy. And it is something, of course, that's very important today. The news important to investors for so many reasons. Today, we do await a major jobs report tomorrow. And with the recent losses in the markets that we've talked a lot about, including the losses today, some are asking if stocks are pricing in a brand new recession. Here now, Mark Matson, founder and CEO of Matson Money. So, Mark, what do you think? New recession?
Well, I don't think we ever came out of the old recession. I mean, let's face it, this president likes to compare himself to Reagan, but under Reagan we went from a 10% unemployment during this time period to about a 6% unemployment. And Obama's done the exact opposite. He's gone from 6% when he took office to 9%. And for me, this isn't a healthy economy till we get people back to work. So I'm not surprised by a lot of the things that are going on today. But the message for investors is that this market is extremely efficient. It takes all knowable and predictable information, pricing it in today. My message for investors is don't panic. This is a blip. You need to buy and rebalance on the lows and think 10, 20 years out down the road.
So let's talk a little bit about your business, Mark, because it's a good example. You have 38 employees, you advise hundreds of investors, and you manage about $3 billion, which is a lot of money, a lot more than most of us have at our 401k. So if you could speak directly to the American people that are also nervous watching these markets, what would your message be to them?
Yeah, my message to them is that, and we have 38 employees, I have 400 coaches across the country, and they work with everyday Main Street investors. And my advice is to ignore Wall Street, because Wall Street takes advantage of Main Street investors by causing them to panic when the market goes down, causing them to get greedy when the market goes up, causing them to speculate with things like gold and commodities. An investor needs to allocate their portfolio long-term with a decent, respectable mix, maybe 50% equities, 50% fixed income, and then rebalance on the lows. Ignore the hype, ignore the horror of what's going on now, because in the long run, this gets worked out.
And we'll caution our viewers, they can take that advice or not. It's coming from an investor, and it's important to take in a lot of opinions, especially when it comes to our money and what we're trying to save for our families, Mark. I know you can appreciate that. Where do we go from here, though? Where do you see, one, the market going, and where do you see the economy really headed as we go towards the back half of this year?
Well, this is the enigma of what we face today. The enigma is that, we're headed down this road of socialism right now, the road that Europe has been down 50 years before us. And that would make most investors think that equities would be dead over the next 10 or 20 years. But over the last 50 years, European equities have actually made 1% more than the U.S. because socialism, heavy spending, heavy debt, heavy recession, these types of unemployment things that are in the market cause risk to cost of capital to businesses. And that means potentially long-term higher rates of returns. Don't give up faith on this country. Don't give up faith in capitalism. In the long run, free markets are going to win.
It's interesting to hear, politics obviously a major point that you consider as an investor. And we're going to have to get someone to debate you on that socialist stuff, because I can't even go there with you, Mark, right now. Hold on a second, though. Rick has our live chat, and Rick, you've been taking in some comments. You said that some of our viewers feel like they know what to do about this economy.
We've got some experts in the chat room. Let me tell you what they're saying, and then you can ask your guest if you want to, Jenna. C. John West says, fix the economy, sane deregulation, and cut back on foreign aid. Randy Snow had this to suggest: force banks to rewrite mortgages, he says, and build a wall between investment banks and traditional banks, which should be highly regulated. So a little bit of an opposing viewpoint there. And finally, this one from Chris Bornstead. He says, please let Congress stay on vacation. That way they can't screw anything up this week.
Interesting advice. Mark, you're back with us. Just real quick here, we talked about the housing market, we talked about the jobs market. Obviously, regulation is something that our viewers are looking at. If there's one thing that you see as key to this recovery, if we could fix one thing and try to get everything started again as far as getting a spark to what's happening in the business community, what would it be?
Politicians have to stop pretending like they're entrepreneurs. If politicians could create jobs, they'd already be entrepreneurs. They need to get off the back of the free market. Let business people like me and all those people across the country create the jobs. Lower taxes, lower spending, smaller government, and capitalists will bring us out of this, not the government.
Are you thinking about running for a Republican office? What do you think, Mark? Just wondering.
After I just watched what the Republicans did with this debt thing, I'll just stay a money manager.
All right, there you go. I had to ask, you know, Mark, it's always great to have you. Look forward to having you back again, and that debate is going to be on, by the way.
My pleasure.
Mark, thank you.